Okay, now we're ready for the general ledger. And the general ledger is literally taking that information that you journalized right here, and usually you do this, I'm going to say a couple times a week if you're using a hand or a manual system, and you're going to transfer all this information onto a page in a book that you can keep track of a total. So it's kind of confusing when you look at this, because this is the actual one side of the transaction. Such as this particular one, let's just look at $5,000. I've debited the cash account for $5,000. Now where did that come from? That comes from this very first entry right here. It says cash, debit, 5,000, capital, credit, 5,000. So if I have debited my cash in the general ledger, I probably, or I better have, also credited my capital account, which I did. I credited it right here. This also had a balance of $4,000 to begin with. So once I've credited here, I'm going to complete that, and now I've added that to that credit. So now I have a balance of $9,000 in this account. And that's how all of these are laid out. I'm not going to make you sick and dizzy by running back and forth between all of these, but and I'll scroll through them a little bit and kind of explain. So you can see we have $5,000 come in here. I had a $3,920 debit, so this adds to that debit. So now I've got $88,920. Now here comes one where I've actually paid money out, and it's $1,750. So it's a credit. This is the debit balance. I'm going to subtract that from the debit balance and come up with $7,170. Another subtraction. I must have paid $2,700 for something, so that takes my account down even further. Now along comes somebody who gave me some money, so I'm increasing my cash, so that adds to it. This should look familiar from your checkbook. You'll see the same things happening over and over again. You've got a debit here. Somebody paid in and paid off a bill, so that credited this and brought it to zero. Then somebody charged again and increased the account. Let's see, you've got supplies. You had a balance of $170, you bought some more, and now you've got a balance of $1,020. Now, all of these would be on separate pages. These are kind of jumbled together just for the sake of the problem. But these would all be on separate pages. You'll see the account number here, and the dates here when they occurred, and the post reference. Post reference in this case looks to be probably, I'm not sure what they're using for the post reference. The date possibly. So if you keep coming down, you'll see how each account lays out as you do this. And it gets, as I said, I won't make you dizzy by scrolling through all of these. Now here are your expense accounts. You'll see where you've got your debits. Most of these will come out of your cash, the other side. Utilities expense, miscellaneous expense, we remember talking about all of those when we journalized them. And finally, we're at the end of the month, and I want to know what I've done. So I go back through my general ledger, and I create what they call an unadjusted trial balance. These are the balances after all of those transactions that I journalized. So now, in essence, this is a listing of all my charts and the ones that have, or at least the ones that have a balance in it. And the main thing here is to pull this all off and add both of these up. And these two had better agree. They had better be in balance. This is what we call having a balanced ledger. And that's one of the reasons why we pull an unadjusted trial balance off to begin with. I want to make sure these balances are balanced. So I have just as many credits as I do debits, which means all of the journal entries were correct. And that, up to that point now, we are into stage 3 of the cycle. The next thing we're going to look at is adjusting entries, because looking at these, if I have office equipment, I'm depreciating that. I did not expense all of that, so that's not been included in these expenses. This unearned revenue, wherever it is, I know there's an unearned revenue here. Here it is. See, it's up in the liabilities. Maybe some of that has been earned now and needs to be pulled out. Those are the kinds of things. We have a prepaid insurance, which tells me that's been paid for the full year, and I'm going to have to adjust that out and put it down here in expenses, because the whole purpose of the accounting in the accrual accounting system is to match revenues and expenses. And if I still have some left here, I'm not matching the monthly expenses that go through. So that's to this point. We will start in again with the adjustments in the next video. So stay tuned. I hope this is helping.